Are you struggling with credit and don't know where to start? With a scary number of almost 30% of Americans who don't accurately know their credit score, this can not only be dangerous but fatal. Not knowing your credit score means that you are not aware of any errors, inaccuracies on your credit report that can negatively impact your score and hold you back from succeeding. You want to get that dream house, dream car, those scores holding you back? Luckily, I'm here to help you with that issue and share some knowledge. In today's lesson, I'm going to go over why credit is important and what affects it. So moving forward, you will be able to have the tools to be successful in this journey. Also stay to the end because I will be giving some golden piece of information of how you can raise your credit score by 50 points or even higher within 30 days. Let's dive in. While we're on the subject of how to clean your credit, we must first understand, why is it so important? They're just 3 scores, right? Who cares? The answer is you should care. You should always care. Your credit score is a representation of who you are without ever expressing yourself in person. It shows, how is this person financially? Are they responsible enough? And that's just the tip of the iceberg. Credit is so important in several reasons. Number 1, loans and credit. It is necessary to access loans and credit cards. Lenders and credit card issuers use credit scores and history to determine whether or not to extend credit, and also interest rates. If you're high risk, you will in fact receive a denial letter, or on the flip side, you will be approved with bad scores, but with the terms they give you, you will feel like you should have just been denied. Not worth it is what I'm saying. Have great scores, ladies and gents. Number 2, employment. Yes, some lenders check credit scores as a part of the hiring process, particularly for jobs that involve financial responsibilities. For example, they might say, it looks like they are great with numbers, but they have a bad credit score. Just with that piece of information alone, they might overlook you and move on to the next candidate. The third one we have is housing. Pretty sure everyone knows about this one. Landlords and property managers and property management companies often check credit scores as a part of the rental process. Having good scores make it easier to rent a home or apartment. Also, it can lower security deposits and possible rental terms. The last one we have is insurance rates. Insurance companies may use credit scores to at times determine insurance rates, but trust me, you don't want to be stuck with a terrible rate due to lack of credit. Now that we've gotten that out the way, let's take a deeper dive into how your credit operates and what affects it. How can I look out for traps if I don't know what I'm looking out for? I got you. I like to call the credit algorithm a messy pie due to the percentages and all the components that it takes to make it. The first piece is payment history. It is the most significant factor that is determining your credit score, worth 35%. It includes whether or not you have made your payments on time, how often you made your payments, and how recently you missed payments. This can make or break your profile. One late payment can make your score go from a 700 to a 590 or worse in the matter of 24 hours. To limit these errors, set up autopay, Siri reminders, and stay on top of those due dates. Trust me, this helped me out. The second piece is credit utilization, which means the amount of credit you are currently using compared to the amount of credit available to you. According to MYFREESCORENOW, it represents 30%. Having low utilization is mandatory in this journey. For example, let's say you have a credit card with a limit of $500 and your payment is due and the balance is $450. And you make the minimum payment of $25, you're left with a balance reported to the credit agency of $425. That is a high utilization of 85%, which looks troublesome. This is a red flag and a no-no to lenders. If you want to go for any type of funding or approval, this gives them the reason to deny you. You want to keep your balances low, or in my opinion, pay them off by the due date. People with utilization of below 30% by the due date are deemed responsible and financially capable. Next, we have length of credit history. It indicates the time you have had your account open. And I say this with the loudest voice. Keep your oldest accounts open. A lot of times people assume that if I'm not using the card, I might as well close it. And I'm here to tell you that if you don't have a valid reason of closing it, don't do it. The annual fee is $500 for the credit card? Okay, that's a valid reason. But if you want to close it because you don't like it or it's not cool, then that's not a reason. Remember, the older your accounts on your profile, the more you look attractive to lenders. Mind you, the credit algorithm is moody, so if you open too many new accounts at once, you can see your score drop. I know. Let me explain the madness. When you apply for something, lenders examine your credit profile with a fine-tooth comb to find any reason to deny you. Let's say you're trying to get $50,000 in credit and you went to 5 different institutions. Currently, they all pulled your credit report. When you get to that 3rd or 5th one, the lenders are going to be suspicious of what's going on, and they always think the worst. They will start asking themselves, why are they going to so many institutions in such a short span of time? Why are they so desperate? They must be in a bad situation. And I will tell you from experience, they will deny you without asking and send you a letter in the mail explaining why. So again, the older the account, the better. Not saying new credit is a bad thing, but just be mindful of the days you open accounts and how many at once. Okay? And the next piece we have is credit mix, which is something that is referred to the type of credit accounts you have. Credit cards, loans, mortgages, and more. How diversified are you with these different type of products? This piece of the pie is 10%. Not threatening, but not having the correct knowledge can make this small slope into a mountain of problems. But it is always great to have a mixture of these products to strengthen your credit profile and to always guarantee positive results. Having a bunch of credit cards mixed with other products and keeping your payments to current or even paying them off will show how responsible you are. Just remember to always have a plan and be strategic. And last, we have inquiries, or as some call it, the amount of new credit. This is the final 10% of the pie that indicates how the pie is made up. The way you excel in this category is all about time and patience. Now, disclaimer, this part of your credit will be at times the lowest due to new credit or applying for a new product. So this part of my credit is in the red, but it's not threatening. If you focus hard on the other aspects of the pie, this won't affect you as much or even at all. Also, when applying for a new credit product, you will see at times an inquiry on your file. What is that exactly? It's like a timestamp where lenders hard pull your report, which shows, hey guys, I got a new credit card or loan at this place at this time, which is fine. But again, it's not ideal for you to go to 20 different places in a week. You will see your credit score drop significantly. It can seriously hurt your credit and make you look desperate or again, high risk. But it depends on the time length. For example, if you had your credit pulled for a car 7 months ago, your score won't be affected as bad due to the time. But if you had your credit report pulled 3 weeks ago, that's a fresh inquiry. So you might see your score drop a couple of points, but eventually it will raise back up. So it's always good to have a break in between your product spree to soften the blow to your credit. Also, I know I stated I'll give out a golden piece of information to help boost and possibly speed up this process, get some of those negatives removed. So here it is. I didn't forget you guys. When you pull your credit profile, a lot of times creditors have old addresses or even personal information that's not all the way accurate. Maybe they spelled your name wrong. Incorrect address, incorrect birthday, the list goes on. You can use that as leverage to help remove and update your credit profile. When you dispute that type of info, 7 times out of 10, you will see negatives associated with that incorrect info be deleted. Why? Well, not to bore you with specific credit laws, it's due to inaccuracies on your credit report. This alone can start you on your way to not only having a great credit score, but financial freedom. So look out for those inaccuracies and dispute, and stay consistent. If you found this information helpful, share this with somebody in need or just curious about credit and why it even matters. My goal on this channel is to push out all of the secrets and tactics possible to help as many people as possible to become financially literate and free. If you have any questions, leave it in the comment section. I'll be sure to answer it, or I'll even make a video on it. And with that, I thank you. And until next time, ladies and gents.